So that's been part of the move here, right? Because I don't think going into this refresh there was any expectation. So when you actually heard about slightly lower prices, you got a sense that shipments could be a little bit better. People have woven in their 5G into next year. But I think the only way you can do this, and I'm long Apple, and I'm pretty bullish here, is by the multiple. That to me is how analysts can begin to start playing with their numbers, and they can make it go a lot higher if you believe that the blended multiple takes you to somewhere 18, 19 times, where at 12 times historically we were starting to say Apple is expensive. With all the capital markets activity that they can throw at you and that dividend and the ability to continue to execute on buybacks, I think they get there.
I think that everyone threw out hardware. Everyone thought it was going to be a services game. So when you enter back in and say, okay, hardware is going to be something, it's going to move the needle.
Tailwind.
Now it's a tailwind. But you have to remember technicals on this. 233 was your resistance. That becomes support. Breaks down below that, exit the trade. And it is overbought on an RSI right now, relative strength index. So I would wait till it gives back a little bit to get back in or to buy more if you're still long Apple.
280 level, and this is actually becomes the math problem we've talked about. It's sort of given a 22 forward multiple off next year's $12.75 or so that Apple's expected to earn. So you can understand where the number's coming from if that's the right multiple. Who's to say? What I will say is, and Steve's talked about this, that 232 level that was a previous high, it blew right through. At least you have something to trade against. They report on the 30th. Market seems to be okay, so maybe it continues to levitate into those earnings.